Good morning, folks. My name is Curtis Chandler, president at PFL. We hope that everyone had a fantastic weekend. In last week's rail report, we called a bear market rally, and we will wait and see. Well, the Dow closed lower on Friday of last week and down week over week 1,329.29 points. The S&P 500 closed lower on Friday of last week and was down a week over week 194.03 points. The Nasdaq closed lower on Friday of last week and was down 663.91 points week over week. In overnight trading, Dow futures traded lower and expected to open down this morning 277 points. Oil settled at its third weekly loss as mounting evidence of an economic slowdown overshadowed supply concerns. Hotter than expected inflation figures fanned expectations that more interest rate hikes will crimp growth, according to some. The potential for more supply disruptions from Russia remains a risk, while China's economic data suggests stimulus measures there were having some success ramping up demand. This has seemed to put somewhat of a floor on prices. On Friday of last week, WTI for October delivery rose 1 cent per barrel to settle at 85.11. WTI was down 1.9% week over week. U.S. commercial crude inventories increased by 2.4 million barrels week over week. U.S. commercial crude inventories are 2% below the 5-year average for this time of year. Total motor gasoline inventories decreased by 1.8 million barrels week over week and are 6% below the 5-year average for this time of year. Distillate fuel inventories increased by 4.2 million barrels week over week and are 21% below the 5-year average for this time of year. Still some heating oil concerns out there. Propylene inventories increased by 3.8 million barrels week over week and are 6% below the 5-year average for this time of year. Propane prices are down 3 cents per gallon week over week and closed at $1.06 a gallon on Friday of last week, down 13 cents year over year. Oil is lower in overnight trading, and WTI is poised to open down $1.66 per barrel from Friday's close. Total North American weekly rail volumes were up 0.46% in week 36 compared to the same week last year. 7-11 of AAR's major traffic categories posted year-over-year decreases, with the most significant decrease coming from other, which was down 7.38%. The largest increase was from motor vehicles and parts, which was up a whopping 40.9%. North American rig count was up 10 rigs week over week. U.S. rig count was up 4 rigs week over week and up by 251 rigs year over year. The U.S. currently has 763 active rigs. Canada's rig count was up by 6 rigs week over week and up by 57 rigs year over year. Canada's overall rig count is 211 active rigs. Overall, year over year, we are up 308 rigs collectively. Folks, we are only 26 rigs away from hitting the 1,000 active rig mark in North America, a big number and a level not seen since February 28, 2020. Folks, we are watching a few things out there worth noting. We are watching the Dakota Access Pipeline, DAPL. Well, folks, good news for DAPL. On Thursday of last week, Energy Transfer received some good news from the Illinois Commerce and Trade Commission. They gave DAPL permission to install pumping stations in Illinois. They previously gave permission back in 2020, but that was appealed by the Standing Rock Sioux tribe and environmental groups that really want the pipeline shut down. Instead, it looks as though DAPL is on its way to increase capacity by 750,000 barrels a day to nearly 1.2 million barrels a day overall. This is obviously not good news for the development of crude by rail out of the Bakken, but good news for the country. See PFL's rail report for further details. You know we're watching this one for you, folks. Could butane blending be back in a substantial way? Well, it looks as though we're not going to be short heading into the winter, as previously thought by some. Supplies are building and price levels dropping, mainly due to lack of Asian interest at a time of weaker U.S. gas demand. See PFL's rail report for further details and some nice charts. We're starting to get bullish on blending. Folks, we do these reports for you, and they're absolutely free. Not only do we dive into more detail discussed in today's podcast, we also summarize the latest petroleum by rail numbers, talk about refinery runs, overall petroleum import and export numbers, and of course we have the latest pricing for all car types. You can't afford not to read this week's rail report. Bottom line, a lot of great information, a lot of fancy graphs. We hope that you enjoy reading PFL's rail report today. On a final note, we attended the Sears conference in Atlanta and report on that one in our report. Great conference, and people were there for business, including PFL, of course. In addition, I was asked to speak on a panel with Jay Carter with Greenbrier. I was asked a series of questions and, of course, answered what I thought were the right answers. You can read the questions asked and my responses to each question. It's a little wordy, but I think well worth the read. Jay and I focused on tank cars. Please take a look and let me know what you think. Constructive criticism is always welcome, folks. PFL has been extremely active in railcar storage, return on lease strategy, subleasing, mobile repair, flaring, cleaning, and mobile scrapping. Folks, we are looking for work. Call PFL now. You won't regret it. We will guarantee you to save you time and money. We simply won't take on the job. Our desk number is 239-390-2885, and we hope that everyone has a fantastic week, and we look forward to speaking with you. And thanks for taking the time to listen to the podcast and obviously read the rail report. There's a lot of stuff in there this week. Thanks.